Good morning, everybody. We have a higher trade across the board in the grain markets here early on Thursday morning. It is 6:30 a.m. Central Time. December corn futures up 4 1/4 at 409 and a half. January soybeans up 11 and 3/4 at 1098. December Chicago wheat up 8.5 cents at 614 and a half. December Kansas City wheat up 7.5 at 567 and a quarter. December spring wheat up 7 cents at 564. The soybean market traded its best level since July 2016 overnight. So we are into some fresh 4-year highs. We did see the January contract, nearby January contract, trade above $11. It peaked at 11.04 overnight. South American weather concerns, paired with strong demand, have helped to lift soybean prices here. When you look at Brazil, a lot of the key soybean growing areas there will be dry during the next, say, week to 10 days. Now, the extended forecast looks wet, but I think that there's a little bit of concern there and maybe a little bit of weather premium perhaps being built in. I still think demand is probably the bigger issue here. We've got another strong week of export sales expected in this morning's report. The other thing about the bean market is that the trade is largely expecting USDA to cut the U.S. production forecast again next week. The average trade guess ahead of next Tuesday's report, 51.6 bushels per acre for the bean crop nationally. That would be down from 51.9 last month. The U.S. carryout projection expected to decline as well. We're looking for that number to come in at 235 million bushels versus 290 last month. So I think you've got a few things going on in the beans. I think you've got some South American weather issues. I think you've got strong demand, and I think you've got the expectation for a friendly report. Weekly ethanol production was the strongest since mid-March. EIA pegged weekly output at 961,000 barrels per day. That was up about 2% on the week, still down 5% from the same week last year, despite the recovery in production. And it's been a big recovery from those lows in February, March, April. Output is still running below last year's pace. Your 4-week rolling average in weekly ethanol production is still about 6% below the same period last year. Gasoline demand still soft. It was down 2.5% on the week and down 8.9% versus the same week last year. The 4-week rolling average for gasoline demand is down about 11% versus the same week last year. So you've seen this recovery in ethanol production, obviously, and we had the best weekly print in several months, but still we're not where we were last year. We're not back to the pace of any of the last few years. So we continue to lose demand for corn on a weekly basis as a result of COVID and these restrictions. So it's still not a great situation by any means. The U.S. stock market has rallied sharply this week, including the addition of a gain of about 2% in the futures market overnight. The S&P 500 is up more than 7% on the week. I believe that this could end up being the best week in the S&P since early April. The index gained 11% in 1 week after the big COVID collapse on the rebound. Traders appear comfortable for the moment with the idea, I suppose, of a Biden presidency paired with the GOP Senate. The Fed is going to release its monthly statement later today, although you should not see any major policy shift there. We have our export sales report this morning at 7:30. Row crop sales, again, expected to be very good. Corn sales expected 1.8 million to 2.5. Soybean sales expected 800,000 up to 1.7. Wheat sales expected 200,000 up to 700,000. The corn market's acting well. We went down, we tested kind of a trend line on the December corn chart. We were able to rally yesterday late, and we are up here again today. Export demand very good. Ethanol still problematic. In regard to next week's USDA report, the trade is expecting a lower U.S. production number. The average trade guess for the corn yield is 177.7. That would be down from 178.4 last month. The carryout projection expected to fall to 2.033 billion bushels, down from 2.167 last month. We're also looking for a decline in the world carryout projection. So the corn market kind of resuming its rally here. Your big overhead resistance level is kind of that 422 up to 424 zone in these nearby December futures. Soybean market, again, strong. Fresh highs this morning. I discussed demand, discussed USDA. The trade generally, when it comes to corn and soybeans, looking for a friendly report from USDA on Tuesday morning. Wheat kind of acting the same as the row crops. The rally resumed following a little bit of a correction. You've still got dryness across the southern plains here in the United States. I think that is still a driving factor that will continue to support prices until you see a shift in the forecast. The trade not expecting a whole lot from USDA in regard to wheat next week, maybe some small adjustments to both the U.S. and global balance sheets. We had a rally in the cattle market yesterday. Not a big rally in the fat cattle, although a couple of your deferred contracts were up over $1, like your June 21 board up over $1, and then your nearby contracts with more muted gains. Feeder cattle market up $1.50 across the board. Most of your nearby contracts here. There was some cash cattle yesterday, 106 to 107. We'll see what develops here later in the week, but that's an okay sign, I suppose. Box beef market was up yesterday. Again, big gains in the stock market ahead of the cash open. The Dow Jones is up 390 points. The S&P's up 62. The bonds are up sharply. U.S. dollar is down sharply, and I didn't discuss the dollar, but the dollar is not having a good week. It's down sharply this morning. That is certainly supportive to commodity prices across the board. Crude oil is down 36 cents, 38.78 December WTI. Gold is up $30 this morning. A lot of volatility in these precious metals. If you'd like some more information, visit my website, www.standardgrain.com. Go to that website, click on Grain Marketing Plan. If you would like to know when, how, and specifically I am pricing corn, soybeans, and wheat throughout the year, it's broken down by crop year, and percentage. It's tracked every single day. That email goes out at 6:30 a.m. Central Time every business day. It's paired with the text message service. I'll let you know exactly what I'm doing. You can cancel that deal at any time. There's no other obligation, no trading account needed. Everyone have a wonderful day. I will talk to you same time tomorrow.